Hey everyone, TraderRomps here. Welcome to episode 1, which will be the long-term volume weighted average price VWAP indicator. So I've got Coinbase charts. That's what I'll be using today to reference everything off. You can use perpetual charts and any other spot price. However, I find Coinbase, the price to be fairly accurate when it comes to these levels, so you can get a good example of what I'll be showing you today. So before I actually do jump straight in the deep end and show you how this indicator works, I want to just take a step back for a second and show you the daily session VWAP, how to apply a standard VWAP, what it is, and how we can also look at volume profile rules or market profile rules, as they are basically the rule set that we'll be using when we actually use the LTVW long-term VWAP setup. So here we have a fresh blank chart. So let's apply a standard local VWAP to the chart. Now I say local because when you apply this to VWAP, you're only going to be pulling data from the exchange, the ticker that you're using. So this VWAP will be Coinbase spot data. So let's go ahead and do that now. If you go to indicators, you type in VWAP, VWAP, and under technicals, you'll see volume weighted average price. Give that a click. Now when it loads, there's a little bit going on here. So what you can do is you can right click and go to settings, or you can also just double click. And inside here, we'll turn the band multipliers off. Now you'll hear me reference these as deviations, these standard band settings. So deviations, multiplier, you can use them interchangeably. So we'll turn them off, like so. And we'll also see this multi-time frame. This will be important when we do look at the LTVW, but for now it comes default on chart, and that's just what we want it on. So we're just going to be pulling data basically off the chart as we go. If you are also using it and you just want a 1 day, so you can keep an eye on the 1 day session, but for now we'll just stick with chart, which is great for scalping. However, when you do preset some of these settings in here, it obviously becomes better for those who are looking for entries on those higher time frames, looking to get in those swing trades. So we'll start with having a look at chart now. So when you press OK, we now have this line that looks like a moving average. However, it's not a moving average because moving averages are generally based on time or plots, certain candles printed finding averages by a set number. However, with this, so the data is coming from the volume. So what you'll see here is this VWAP is basically what's the fairest value as we go through looking at these candles. Now at the moment, this is great for mean reversion, and the mean being the actual VWAP here. So we can have a look here. We can basically just see where price is respecting, climbing over the top, heading down, back up, and so on and so forth. So you can see how we sort of just continually revert back to this line. So at the moment, this is basically just a line on the chart. There's actually not very beneficial. It's not really helping with entries and exits and sort of monitoring the trade. So we'll jump on in now and we'll add this standard deviation or band multiplier, 1, which can be +1 when it's above the band and -1 when it's below the band. So apply that, and now you see this band or cloud, whatever you want to call it, appear. And before we go right into the volume profile rules, we can basically just discuss, now that we have this band on here, how this can be a little bit more useful, and it can be useful for your trading. So when we actually have price within inside the band, this is known as balanced. When we have price going above the band, this is known as imbalanced up. When we have price below the band, this is imbalanced down. So if you were to get in this trade and you know, maybe you've used smart money concepts, footprint charts, or TPO profile, or whatever other sort of technical analysis you've used, and you've got in the bottom of a wick or top of the wick, this can just be used to basically navigate and basically look at the strength of a trend or the strength of a downtrend. So being the strength of an uptrend, we want price to stay above this cloud here. So we can see a higher low would be put in here, and if we entered back inside this band, we might think about reducing our position size or closing our position size to get in lower again if we find that we're going to get a bounce off the other side of the cloud. So basically it's mean reversion, where you can see through here where VWAP kept price in between the standard deviation one negative, whereas up here, as soon as we came back in, it was quite bearish. Basically had not much of a retest here, but the moment that we dropped out of here, if you were short, what you'd be doing is you would not be closing that was short, and you could build a campaign as we're making those lower highs, essentially as we're moving down until we get into a discount market. So the purpose of this video, and so it doesn't go too long, I just wanted to quickly touch on volume profile or market profile, basically just getting the rules off of that. However, I will do another video in the future on volume profile and market profile for those who are unfamiliar. But essentially what I've done here is we can just picture this being, say, a daily session. And this would just be a well-balanced D-shape profile. So the POC, or what we're learning today, is VWAP, interchangeable here. So that orange line would be equivalent to just that standard VWAP line, and the value area high would be the +1 standard deviation, and the value area low would be the -1 standard deviation. So we touched earlier on that basically when we're inside of this value area, we're just going to be balanced inside of here. So we just remain balanced, going from edge to edge, and off we go. When we're on the outside of it, we can then from here get imbalanced up, and when we're below it, obviously we can get imbalanced down. Now what will actually happen a lot of the time is when we are in this balanced area, as we spike through, we may just continually bounce back in and out and in and out outside this value area, remaining in balance. Now how that works is when we poke up through the value, this being a 70% of the main volume and value, what will happen is as we come up here, we have responsive sellers will kick in. People will take profit, and people will load up their shorts and push price back in, because at the end of the day, the POC, the VWAP, is the fairest of value. So until something changes in the market, we get a shift of condition, we're just going to continually rotate around this fair value. Likewise, when we come down into the value area low, or below the standard deviation -1, we're going to have responsive buyers kick back in. Again, people will take profit, reducing the sell pressure, and people will take advantage to get that mean reversion back up to the POC and VWAP. Now, every single time we do come up to one of these areas, what will happen is you'll have a lot of breakout traders, and that's known as initiation. So initiative people will go long when we get into here, and a lot of the time you'll see in auto flow, they'll get trapped, and as they puke their positions, price quickly reverts all the way back down to the VWAP, and at times will work all the way back down to the value area low again. Likewise for when people short the lows, or puke their position into the lows, and price reverts back inside, back up to the point of control. So from what you've just learned, we now know that these edges, or the VWAP edges, can actually be the edge of your trading. And how that works is we're waiting each time for that mean reversion and rotation to the other side. So there's no point at all of taking a position at the POC. It instead is a destination. So if you were to get short here and price does rotate down, you might want to reduce your position size a little bit here in case we do rotate back up and get wicked out and it moves back down again, or there is a shift in market condition where we do break out. So there will be times where we'll get a retest of the point of control and then continue with initiation to break out. However, the main goal generally is to target the other side. So it's up to the trader and their rules if they want to be reducing their risk at the point of control or the VWAP. Let's now discuss the 5 auction market theory rules. So rule 1, if price accepts back inside the balanced area and we get a retest of the value area, we can assume price's destination will be a traversion to the other side of value. This then becomes a destination, not a trade. So we're not to go long off this area, but instead we're to close our short position. We can then monitor closely, and based off these rules, if we get acceptance back inside and we get a retest, this becomes a new trade and long position that we can traverse using the rule 1 back to the value area high, again, as a destination. Rule number 2, if price has spent a fair bit of time in the value, we can assume that price will remain rotational inside of the balanced area. When price spends more time in value, we can assume for more choppy conditions. Rule number 3. So when price breaks out and accepts outside of value and we retest, we're now in the imbalanced up state. So we can work our way to an old value area and reject off the value area low, or at times we'll find ourselves working all the way back up to the POC VWAP, and then from there either accepting into the old value and beginning to be rotational within the old value, or if there wasn't a value higher or lower than price, we will then create a new value area. Rule number 4. If price moves up to the point of control and we get a sharp rejection, this interrupts rule number 1, but can also at times lead to a very sharp sell-off below value area low or value area high, vice versa. And rule number 5, if price spends a lot of time at an edge, also known as compression, there is a high chance that price will become imbalanced and break outside of the value area. So they were the 5 auction market theory rules. Let's actually talk about how we would put that into practice when it comes to actually taking trades. So if we just break it down and make it quite simple, there's 2 types of trades. One is a return pullback and the other is a breakout pullback. Now how they would work, for an example, say we've shot up and we've trapped a lot of initial breakout longs, we're not going to enter a short straight away. Now sure, there's other ways that you could have got in already, and that's all well and good, but let's just talk about what we see at the moment as far as using this strategy based on this alone. So once we enter back inside value, what we're doing is we're looking for price to come back up and tag the value area high or the zone within there within some market structure. This here becomes a point for you to enter a short position, and then rule 1 will kick in. Obviously, if you're concerned about a rule 4, then this is where you'll take some profit, at least enough to be able to cover your stop loss. And then with this, you can use market structure to the left for a stop loss. Typically, most people put it above the high. There could be an FVG or something for you to also put a stop loss above. Or if you're very conservative with your account and you've got a nice pin bar or something here, then you might just put your stop loss here. Obviously, the destination would be targeting the other side of value, the other edge of value area low. Let's say price has dropped outside of value and we haven't been able to get back in, and we've spent a little bit of time underneath value now. What we're now looking for is price to come back up to the value area low. It could be some market structure, so it might not make it all the way up. Sometimes the market's polite and it will fully give you a little bit of a wick into it. This here now becomes a short position. This will now put price into an imbalanced down state, marking down to find a previous value area. And this is known as a breakout pullback trade. Okay, so just going on what we've covered the local volume weighted average price indicator. We've covered volume profile and VWAP, both function the same. Markets will spend 80% of the time plus balanced with inside ranges and value areas. The 5 auction market theory rules, and the best trades are taken at the edges, not inside the value area or around the point of control or the VWAP, as it's just chop. The edge is your trading edge, and the return pullback and the breakout pullback trade setups. Some additional information: you can find screenshots of the 5 AMT rules using VWAP in my channel on the Crypto Dojo Discord. Now these examples are actually examples with Japanese candlesticks, not just diagrams drawn up. And you can go to cryptodojo.trade to join and check out the Romps Trades channel with inside that for long-term VWAPs finally. So you've had the veggies, now it's time to have the meat. So with this 4-quadrant window setup, we have the yearly VWAP, base week VWAP, the quarterly, the monthly, and the weekly. So I'll just put a year quarterly, monthly, and weekly. Now I've set these times to the daily, 12-hour, 4-hour, and 30 minutes. Generally, I like to look at those to line all these up. Obviously, this window here is more of your scout window, so you can drop down to the 5, the 15 minutes. You can change any of the time frames, but we try to use this tool as a bit of a navigation, narration tool. So obviously, nice daily candles here on the yearly, then 12 hours for the quarterly and 4 hours for the monthly, and it gives you a nice 4-hour chart to keep an eye on, 12-hour chart to keep an eye on, the daily for your daily buys, and the weekly, obviously, for pinning down those entries, especially with those nice 30 to 15 minute to 30 minute candles. LTVW indicators are actually aggregated. So I mentioned local before when we were looking at VWAP, meaning like you were only pulling data from the exchange that you're actually using. So even though we're still looking at Coinbase on here, the actual indicators have found an average across a vast amount of exchanges, and that way it's sort of averaged out these levels. So obviously in trading, nothing's ever perfect. Every now and then, you know, like if you're looking at something like this previous week VWAP here, we get like a nice little tag into it, but you don't always get that perfection. You know, sometimes it spikes through it, but it's just good to have this aggregated, these levels, because obviously you have a higher chance, a higher strike rate of them at least being hit. And they do work very well to sort of give you that average of that support resistance supply demand level. Let's just expand the yearly VWAP. So I mentioned earlier on before, we're just looking at the session. So now that we're actually looking at this yearly, we can see here, and you're probably thinking to yourself, oh, why is there this big box? We'll break it down a little bit, okay? So first of all, what we did earlier on was we're only looking at what's known as a developing VWAP. So when you put VWAP on, it's just developing, like as the candles print, it's finding that sort of average of volume, and it's sort of trailing along with the price and giving you those bands that you can sort of work off as it develops. What these indicators do is they give you the previous year, and they just add a value area high, value area low, and a point of control, or a VWAP, like we discussed at volume profile there. So what I'll do is I'll just remove the developing at the moment, so I can explain what I'm talking about. So these are the previous. Now, what that means is this box that's been generated, which I've titled previous year, I've got the, which I've titled previous year VWAP, previous year value area low, came from this year in here, which is the year 2022, obviously. Now this box here is the year before's value area high, the point of control VWAP, and the val that came from 2021. So it just creates that high, that low, and that center. And these levels here, being static levels, are, in my opinion, a lot stronger to trade from than the developing. As I said, the developing is great for scalping. You can also use the developing, especially a daily developing, over you know, a weekly or a monthly previous value area, because as the developing lines up or is nearby to one of the previous levels, we can sometimes be able to find an entry off the developing rather than waiting for the previous val. For instance, because as I said to you before, it's not always going to be perfect. So there will be times where the higher time frames do tend to hit harder, but if you are looking for a lower time frame or the weekly, you know, it could be front run by a few bucks or 20, 50 bucks. And that's where having a developing daily value could, at least you can see a pin bar forming inside, you know, the standard deviation 1 band. I'll bring an example up with this shortly. And then I'll click, but at the moment, let's just take a step back again and focus on the fact that these boxes are these static levels, and the developing level is forming as prices forming. So I'll just flip back out of this yearly previous now, and I'll put the developing back on. So this is the 2023 developing band. Obviously, it's still respected quite well. You can see how we held along the top of it. And obviously this was so this is where it closed of the 2022. So the high, the low, and if I just add on the previous over the top of this now, it should make a little bit more sense. And that is why that box appears here. And then we had this developing area, and it created a box here. And now we can talk a little bit more about those volume profile rules, more so using the previous values rather than focusing on the developing value. Obviously things like with the developing value, I love the imbalance down stuff. And then obviously it's still got, you know, a rotation that you can be looking at. But especially when we're looking at the previous value here, what happened here? Well, we rejected 3 times with a rate above VWAP. And as I said before, on an even higher time frame, you'd see that would be a pretty aggressive spike, rule 4, and that's what created the imbalance down. So going off the previous year value area high, we didn't quite hit it here. So obviously a lot of people who had a destination to actually hit that high there, potentially in this area here would have got stopped out. A little trick that would have happened there. Developing here shows, if I'm showing you this at the moment, you're probably thinking, oh, look, it didn't really respect it. However, some of the lower levels, such as the previous quarter and previous month did, which we will get to shortly. But for now, you can see that we finally came up to this previous year value area high, and we pinged it off a couple of times. We had a raid up above. So it's sort of like that 4-touch rule. You can see that 4th time hit. And then currently we're rejecting off it again. Destination currently looks like it's going to come back down to the developing yearly at this current point. While we're on this yearly, let's go and have a look. A good example I like is 2019 value area here. So you can see basically this was the 2019 value area. And you can see where we obviously that little slit through there is basically where it became a static box. This is before obviously the COVID low that got put in here. So this is a bit of an anomaly basically, but at the same time, nonetheless, price still came up and it didn't have the sharpest of rejections, but obviously, you know, what was going on with macroeconomics and stuff, we did rotate back down here. But here, right here is where we had that rejection of it. We had that bit of a bowl shape back down into the developing. Then as we came back up, we spent time. So the important part here is we want to spend some time above the area. This here is acceptance, came back down. We can see all the bulls would defend getting acceptance back in, because what's the rule? If we do get back into here, it can start a traversion back down to this point, or a rule 4, which is what potentially on a higher time frame you ping off and you'll head back up. That is what they wanted to avoid. They did avoid it, and then what happened there? We got another retest coming in off there, another bit more time spent, another bit of a retest, and the whole time the developing underneath was being supported. So we're pinging off that developing value, and then we imbalanced up nice and strong from there very, very quickly. Now, I did say I wanted to mention this, a little bit of a deviation into the developing yearly. So we'll come over here to the 12-hour with the previous quarterlies. Now, at the time, this quarterly had closed off. So when price was above here, we had this as the previous quarterly, and you can see how we're respecting off it a few times. We did break down into it, but very, very quickly, basically just a couple of days worth of time was being spent inside that area there. So obviously a lot of people who went short would have felt a little bit of pain and got caught up in there. There was a few other things, obviously like a falling wedge, just some good old standard TA that you could have done to still be able to catch that and have an idea that would push up. A lot of people got bearish in here, but generally this here isn't enough for me. Like I would have wanted to see something even further down and then come back up and get a retest of this level before entering short. Shorting the lows is never a good idea. Obviously, you got this rule 4 that had happened here, then you'd just be sitting tight until you saw something like coming up into here. We can also see how this previous quarter, as it was coming down here, we were imbalanced down, and we had a little bit of a fight, obviously, to get inside it. Once we got inside it, people got very, very keen, and we just boosted straight up into that previous year area over here. So let's just take a step back for a second and just quickly go what we've done so far. So obviously we can see that we've had a rejection of the previous yearly value area high. And at the moment we have this developing quarterly that's formed from here. And with that, you can see at the moment from about this point on, we have struggled to reclaim even the quarterly. As you can see, we rejected off the previous quarter value area high, which was this area over here. So we're rejected. So currently we're actually back inside it. We have spent a little bit of time in here, which is straight away very bearish, starting to look pretty bad, especially with this rejection here, which tends to make me feel like we are going to go lower. Look, anything's possible, but nonetheless, we trade what we can see. And we come down the monthly, pretty much the exact same thing. So we have a new monthly from here, and the other day we just shot straight up just to test the value of it. We didn't even make it to the VWAP. Not to say that we can't still, but you can see now that we've just had that big pin bar rejection, high volume point of control up here, which could be a liquidity, but if we came up, I'd definitely say that that would be a short entry again. So there's a lot of things pointing for this to go further to the downside. That imbalance down of the quarterly's imbalance down, obviously the monthly's imbalance down, and inside this developing, you can see that we're struggling on the monthly current developing VWAP. We can't even get up to the developing value area high of the VWAP. And we'll go to the weekly shortly, but that's basically just looking at that sort of high time frame analysis at the moment of where we are, and being able to have a few lines in the sand. Like obviously, if we got back inside here, rejected, but we actually had some strength instead of pushing back up, we'd be mindful of a rule 4, but we would have to be targeting the previous month value area high, where you can see there's this FVG in here. It would actually be the top of the FVG, and there would also be this mitigation block in here as well. So just while we're on the monthly again, I've actually just got this chart up again. I just wanted to bring something to attention here. So you can see that when we broke down to this previous month value area high, obviously we have a new one now, but nonetheless, what we can actually see is if we still go off the month before the current month, which is this straight line through here, we actually spent a fair bit of time in this area here. And what that tells us is it's pretty much activated a rule 1 from this point here. Nice big rejection, and what we can see is we can actually potentially now rotate back, traverse down to this VWAP through here. So what I'll do is I just want to show you that if I just put a box just over this area so we can identify it on the yearly, and we jump over the yearly here, so we're not too far off this developing. Now as time goes on, this developing will continue to crawl up, even sort of flatten out, but it will crawl up. We've also got the previous quarter here as well. And we also have this high volume candle over here, which is this dotted line through here. I won't get into that today, that'll be for another video, but every single one of these candles, like the volume profile that we discussed earlier on with the rules and everything, every single candle has a point of control and a value area. So this point of control, where the most volume and the first value is, actually lines up with this little area through here, actually lines up over here with basically the developing yearly value area. Okay, so now let's look at the weekly. So keep in mind that previous quarter value area high that we rejected and we couldn't get back into balance there, and the previous monthly value area low with the monthly prize value area high that were rejected. So straight away we can see how this all lined up and could have gave you some insight as it was happening, not like a lagging indicator, but as it was happening. Let's drop down to the weekly and we can diagnose this a little bit more. So at the moment, the weekly is a bit of fuckery going on because we actually have the developing basically engulfing, and we have embedded within inside the actual previous week value area, and that's why we get this chop here. We're getting support basically off the developing value area low, and every time we get in, we're basically getting a rule 4. We basically got a rule 4 here, perfect example of a nice, could have had a limit order on that, would have been beautiful, and it's popped down, and basically the bulls are just trying to hold up here and defend the level. So now if we also have a look at this basically naked, so we'll call this a naked value area. This was from July, when we closed July the 23rd. So when we had that Monday open, what we had was an open drive, and we came straight down underneath the value here. And you can see that we had this rejection, we had the developing. Now remember earlier on how I mentioned basically like we can mix the developing of the daily. Well, this is just still the weekly, but earlier on this would have been the developing a weekly would have been perfect. So you could have teamed up the val of this week with the developing VWAP. And once you get a big pin bar through that, clear rejection, stop above the high, and imbalance down. So this remained a naked area. And as I just mentioned about the quarterly and the monthly value area low, we can see that we actually came up into this naked weekly's value area. We hit the VWAP of this area. I did take a short. I was on my phone and I was out for the day, but nonetheless, I still saw this on my phone. I took a short. In the Discord, I said that it looks like a rejection candle, and this was a rule 4 that dropped out. We marked down, and as soon as we hit this this previous week, we did ping off it for an attempt to hold within this area. This wasn't the cleanest. We can overlay a daily and see if we can actually see perhaps a daily value area high, which would have given you an entry, and we've just rotated down ever since. And yeah, struggling at the moment with potential rule 4. This is just a sign of weakness that we cannot even get a traversion back to the high. So at the moment, it's just remaining balanced within here. And at the moment, another rule 4, the clearer rule 4 that's pushed us down, and now hanging on for dear life for a potential markdown or some more fuckery if we do accept back up and inside. But this whole area here, being with inside older value areas, is a sign of a rule 5 compression. So it's always good to be jumping between spot and perpetual prices. Now, I say that because even though they're aggregated levels that are pretty much all the same, price action is different, and we always want to keep an eye on spot, as spot is king. So basically something that I did notice was perpetual Bybit and a few of the others, they actually did hit previous week VWAPS with price being high lev. They actually did get up to here. But because spot hasn't got there yet, I do have a feeling that there is potential for us to still rotate up. Perhaps some sideways for the weekend. Could drop right now, but I'm just saying there is this high volume candle here, and previous week VWAPS hasn't been tagged yet. So we do talk about a breakout pullback trade. Again, we don't just short here. We are below the value, but we still would like to see some sort of movement back up into this area here. Then you can be safer to short and target potentially, as we discussed before, the developing yearly. But until then, I actually did get a short up here, and I did get long down here. So I've just had short at the moment at this current point of time. All right, so apologies for how messy this is. I'll give you a quick rundown. I made the dark green the daily developing, and the grey is obviously still remaining of the weekly. So the box here is the previous day, and a previous day here, and a previous day here. They're developing in there. Not easiest to see, but nonetheless, I just wanted to show you something. We mentioned earlier on when we're talking about this area in here. Now, I said to you that we didn't quite get when we bounced off here, we didn't quite get back up to the weekly developing value area high, okay? But at the same time, we also had this daily developing through here. So the way that you could have looked at this at the time would have been, you know, we're not here and we're above here. So this whole area here, just going off this strut alone, like obviously if you use, you know, some SMC, you could say, well, you know, there's a block in here, and on order flow you could say, oh look, I saw a bunch of trap longs here and I got short. However, what we could do though, if you were really in the zone, you would have seen that you would have got a close underneath the value, especially on a lower time frame. This here could have been a trigger for a short, because now we're just going off the developing that we accepted back in the weekly initially, no call for a short here, using this alone. But nonetheless, when we came up here and we rejected out of here, we are now imbalanced down. And by the time we've got down here, we've accepted back inside the weekly. So then the rule for that would be, if we're going the base of the rule off the weekly, then we're aiming for the developing weekly value area low, and that's perfectly where we got to. Now, you could also say, where do I long? Do I long here? No. Rotate over, nice pin bar, off, developing, time spent in here. This pin bar here is an entry. This is a return pullback. Now, where do we target? being real here, what do we target? Up here. Did we get it? No. If you were a trader who took some profits at the point of control or the previous week VWAP, you would have been fine. But so far, there'll be people still long in here that would have got stopped out during the New York session. So this is why I personally believe we should be covering up position stop loss and a little bit more to increase the equity curve of your account. Don't be greedy, take some off here. I just noticed that I had this array here as previous week value area high, and it was supposed to be a previous week VWAP. I'm probably sure you would have put it together if you were thinking what was going on there. This is previous week VWAP. I just hadn't changed the language. So we just had like a little bit of history stuff here. We had a new weekly, and we opened below the value area lows, so we are in discount. So by default we're looking for longs in this point because validations become really very easy. Underneath lows, yes, you become liquidity, but your risk to reward obviously is a lot higher than trying to take a long in the high end at rejecting. So basically, if we have a look here, we can see that when we opened up the new week and we darted down, we had this high volume candle, which took some liquidity from this low. And then straight away as the day progressed, we got into back up inside VWAP. We rejected initially out of the value area low. We got a return pullback into this section here. So, you know, like you could have taken it here, or you may have waited for a bit longer. Either way, entering along in here would have your stop loss below the low before. And then obviously we did actually gain some traction, and we got that full traversion to the top. Now using order flow or something, I'm sure you could see a bunch of trap people and take a short, but just using this, there was no need to take a short in this position. So we've got a long that was successful from here. We have rotated back down. So again, it just perfectly shows that even had you taken this aggressive high volatility short, you would have wanted to close again at the previous week val, which we perfectly hit. But then from there, if you're looking for a short position, you would have wanted that time and space in here. So you can take a short here. And again, target previous week value area low. Once we got up into here, you probably would have been, this is another example of not waiting for a perfect retest, but the actual developing gave us this nice retest here. And as we started to push away, we could have found a position with a stop at these local lows or underneath the major there. And then we've rotated back up. And because we have taken a position from here, it would be recommended to close out some of your position here and position here. Having seen this wick, you probably would have completely closed your position, or if you're using the developing, you would have seen we maintained staying in balance. So for some who would want to actually see some candles in here where they'd close their position. So there's lots of different ways that you can play it, but what you can see, going back to that volume profile rules, was obviously whenever we're around a VWAP, we get a lot of this choppy price action. So it's not a point to be taking a position. You want to be waiting for these nice big clear wicks, obviously, to position yourself. And the hardest part of that comes with the patience, obviously, because this is 30 minutes. Every candle printed is 30 minutes. So if you're someone who wants to be in a trade all day, every day, this is how you're going to continually get chopped out. You just need to be patient, wait, and that will lead me on to the next section to get your life back, which is setting alerts. Okay, so this might be common knowledge for a few people. However, this is basically for those who don't know or those who aren't using it. Now that we understand that we have these lines in the sand where we want to be taking trades from, for instance, the next place I'll be looking for is this previous week value area low. So what I can do is right click, and I can click add alert on horizontal ray, crossing, and click create. So what will happen now is when price crosses over that, I'll get a message on my phone and on my Apple Watch, and then I can come in and jump on the computer, and obviously I'll use order flow myself, but at the same time I'll also just be looking for either another one of these really clear rejections up into here, which means that I can re-short if I get stopped out of my current short position here, which I have slightly in profit. But what I'm sort of looking for, obviously, is if we claim the area through here, then we'll be looking for a return pullback. And if we fail here, I'll be looking for a breakout pullback where I can reopen another short and I can target lower down First area I'll be targeting would be here for a partial, and we come back into the return pullback. I'll be targeting here, the previous week, and closing the full position at the previous week value area high. So this has been a rundown of the long-term VWAPS. Hopefully you've now got a bit of an idea of how they work. We can do questions and answers on it, so I can answer anything that I haven't covered or I wasn't too clear on. One more thing I wanted to bring to the attention is the extra standard deviations that you can add to price. Now, I've added them on just to the yearly because it's a good example at the moment. You don't always have to have these on, but obviously we have this one standard deviation, but we have common deviations, which is here's 1, 1.5, 2, and 3. And the reason for that obviously is as we push up and out of price and we're really far away from the mean and we've moved very far away from the standard 1, we still want to be able to gauge what price is doing. And it's also good for, this daily candle. So if you want to be still using, say, for instance, a yearly VWAP to incorporate into your scalping, you'll be able to see down in here, we had this little pin bar going here. It came back up through here. We had another pin bar here, and we've just been bouncing in between during this section, the 1.5 and the 2 bouncing through. And then by the time we got up to here, we're near, and a daily level VWAP would have shown us that even though we didn't hit this yearly, we had this nice daily rejection, and then we moved back down. But it's just a good way of being able to still trade away from the mean. And then obviously when we really start to move away from it, it's a bit of a telltale that, hey, it's probably time that we return to some fair value and give it a test and see if these prices are what the market agrees to. That's all for now, guys. Thanks for watching. Hope you enjoyed it. Make sure you like and subscribe and leave a comment if you feel, and I'll see you in the next one.